Hello traders, Mark Chapman here. Today's date is Wednesday the 20th of December 2017, and I just wanted to go over a bit of training that we did yesterday, and just as it's developing. So if you want to check yesterday's video in case you hadn't already, I was just making the comment that manipulations can happen on levels, not just support and resistance, but also as price acts as support and resistance at the same location. In many ways they can be better because there's so many people been trading it, very obvious and very clean, and we talked about how this could develop into a more complex version of entry cheese than the one we'd already discussed. So basically we'd got up to price heading up, sorry about that line, but you get the idea. None of that had developed yet, and what I talked about was that what we could see is price come to the level, and then I actually mentioned that it'd be nice if we got some type of big engulfing candle and maybe a couple more candles, because it's just serving to induce and seduce more people in to the trades. And we were talking about also that let's just zoom in, that this was an accumulation of stops building because of the reasons I gave yesterday, but I'll just quickly go over them. Now. Hang on a sec. Fibs. Right, so we talked about this area being a bit of premature entry cheese, because this would have looked like a sort of a minor resistance level. If you went down a time frame or two, it would look a little bit more convincing. And we were describing basically that if you were trading across a range like this, and you'd been making money from the buy side down here, this is an area where you're looking to take profit, but it's also an area where, as price creeps towards the level, people will start getting nervous, because people want to realize, the buyers down here want to realize the profit that they've got in their account. So what some people will be tempted to do is come off their process ever so slightly. So let's just say, their take profit was right at the level. Not that anyone would do that, but let's just say that it was. As it creeps closer to the level and they start seeing some negative price action, right, it starts to maybe roll over, they get nervous because they're thinking, oh Jesus, this could reverse early. So those buyers start to prematurely come out of their positions, and that's forcing it to sell off potentially just inside of the level. But also people who would look to sell off that level, right, and maybe their process is that they wait for the absolute touch of that level before they enter, because it's falling a little bit shy in real time, and maybe they've been waiting for this for quite some time, this setup. Maybe they'll come off their process and jump in a little earlier. They'll still place their stops above the swing. What it means for them, these price swings, what it means for them is that they're going to have to take on board a little bit more risk in terms of a stop, right? Not necessarily more risk, but more of a stop loss, because they're not going to place the stops here when they've got such close proximity to the major level itself. So that's where the beginnings of the stop loss accumulation starts at this level, and then you get price actually come to the level perfectly, right, and a bit of an evening star candle pattern, perfect short for people. So in we go again. So now we've got the people who are a little bit more disciplined, who waited for the actual touch. We've got their stops there too. So now we've got a bit of a carryover in stops. Price breaks down and breaks this price structure, makes a new low in here, and you're going to have people trading the break of that structure. Now again, they're gonna place their stops above above this level most likely, because you need to give it a little bit of room. There's no point choking off its potential when the trade's still valid up until that level. So now we've got some definitely more stops. There is an argument that this wasn't an accumulation potentially because it just drew in some. If everyone, imagine there's 100 traders trading at the level, maybe them same 100 traders are a part of those two touches total. So what I mean is maybe 20% of them went in early and the rest waited. So maybe there isn't an accumulation there, but maybe there is a bit of a one as well. But there's definitely one when you get the proper when you get the breakdown. You'll get breakout traders placing stops above there. So we're starting the accumulation of stops. Pull back. There's some selling in there, that would get some shorts in. There's selling there. The perfect entry off the 61% fib doesn't close above the level, lower high as well. So all this is entry cheese. Definitely now we've got additional stops there. And yesterday we were up to this point. We hadn't seen this. All we knew was that, and I talked about it'd be nice if we had an engulfing candle. Well, that's what we've had. So just as strong as it gets, right? Closing well below those prior candles, below that swing, closing right at its lows. Then it breaks and continues lower, right? This would have been negative in real time. And then you have a pop-up, retracement, drags more sellers in, right? Believing it's going to go down. And now, boom, they're caught. So stops for sure above there on that engulfing candle, stops for sure in there on that retracement. Sorry for the drawing, maybe it's not that clear, apologies. So we start definitely with our stops in there. Maybe I got that slightly wrong thinking about that being additional stops, but definitely at the touch we start that process. Then we have the breakout traders, then we have the retracement traders. So there's definitely 3 lots of traders in there, and then again 2 lots in there. So you know we've got that build up of stops at the level, and that's why it's important to walk through the price and think about it. It's like I missed that in yesterday's analysis. I was considering that as an additional lot of stops, and I just did it again. But then I've realised no, it wouldn't necessarily be additional stops. It could just be a portion of the level traders who are hemorrhaging off the process. So net the two together combined make up that 100% of people who would take that trade. So that's why it's important to walk through the price step by step, and it'll uncover things to you that at first glance are not perhaps not obvious. So all this is, again, what I said, all this is serving to do is to make sure that there is a load of buy orders above that level. And again, you know, this can continue. So now we're going back up, it can do it again. And what it's doing as well with these microstructures, it's creating like a double top, triple top within itself, right? Forgetting the sort of broader scenario, just in this little area. None of these moves followed through to any extent that would basically frighten off anybody from holding those shorts. You know, there's a degree of objectivity that's lost when you're in a trade. People want to make money. The level's still legitimate. So when you have a level and sort of prices inside of the level still, if your stop is above that level, you know, it's very unlikely you're going to bail on it, even if you're having some adverse price action until price gets above that level. There will be some people who get a bit nervous and exit. But by and large, if that's one of the benefits of a level, is that it gives you a line in the sand, right? You know when essentially the trade's over. Not when you're wrong. It's wrong to say, which is often said in trading, you know where you're wrong. There's no such thing. right? Know where you're wrong. There's no such thing as know where you're wrong. There's no when the trade is not legitimate anymore. If you take a trade and you held to your process, right, and you executed on that process, and the trade doesn't make money, and ultimately you get to the point where that's patently obvious, i.e. above this level, then how is that wrong? You're not wrong. It's just a trade that wasn't profitable. The key thing is, did you execute? And if you did, it's a great trade. So always baffled me that well used, overused saying in trading. Anyway, I digress. So yeah, so again, you know, this looks great for a stop point. You never know. And if you contrast the two economies, you know, do you want to be buying dollars or selling them? Well, you can make that decision, but we're in a situation where there is definitely stops accumulating above that level, and that's just perfect conditions for manipulation. Doesn't mean it's going to happen. I don't know any more about that than you do, but if it pops up, fires all them stops, those traders will get creamed, and then you have some type of retracement that fails, and then boom, that wouldn't be too shabby. So yeah, just interesting. Just as and again, just as it continues, this can continue, and all it will do is it will just continue serving to draw more traders in to sell off the level. As I said, that these microstructures that are now creating themselves, this can go up and down, right? Sorry, I'll just use the same color, but you get the idea. This can go up and down as many times as it wants. The more the merrier, because it's just, again, just dragging in more and more people to play stops, and the more times it occurs, the more stops that will accumulate. Simple as that. And yes, it could hold, and yes, it could sell off, and yes, you know, if you're a support resistance trader, you'll go, aren't you an idiot? Well, no, because I'm trying to trade against those traders, and if it never gets to that point, it wasn't a setup. Simple. That's just what you know. That's just part and parcel of remaining disciplined and patient when you process and you edge. Well, when your edge presents itself, then execute on that process. That's just part of trading. You know, you take your trade. This is one singular trading event. The outcome is the outcome. Let's say it is a manipulation, right? And then down. You know, I'll wait for that. If it happens, I take it, and then we might go into the future, and the next one doesn't do that. It builds, it looks as if it's going to give you that scenario, and it holds, and you know, the support resistance traders have it off for that particular scenario. Good for them. That's not how we trade. So we're just waiting for these things to unfold. That's part of trading, right? Edge is not everywhere. You know, that again, that's never you know, widely discussed. Edge isn't everywhere you look. Edge is when it presents itself, then you act. It's just a historical scenario that's over time been more successful than not, and you never know when those scenarios are going to be profitable or not. Your job is just to be patient, wait for it to show up, and then execute. That's it. This looks good. This has all the hallmarks of a manipulation, and you just get to that point through experience and seeing it, but it might not be one. That's okay. I'm totally cool with that. There's millions more that will be, and we'll take advantage of those for sure. Just on the actual manipulation itself, none of us know how that scenario is going to play out, or indeed how it's going to look when it comes back inside. Sometimes when it does come back inside and we get the opportunity, we've got to trade in here. This is where the edge is in this scenario. When you're back in this area after this has occurred, then you have to trade in here. But what can happen is it can take another swipe to the highs, and you might think, well, why the hell would, you know, hang on a minute, if that's a manipulation, then how on earth is that occurring? Well, the reason is, imagine you're a big institution, you've got to fulfill a huge order. All it's suggesting is that the order hasn't filled yet. So if it takes another swipe, it's doing so because it's still got business to do in and around that level. But the problem is, when we're here, we've got to pull the trigger. This is where the edge is. We don't know whether or not that business is completed or not, and we will never ever know. So sometimes in this scenario, you might, you know, the trade might go against you, even though you've been super convinced about the edge presenting itself. And the way you get confident in that is your ability to, one, spot the levels, and two, realize what's happened. But you be confident that that was a manipulation. When you're down in here and price starts to go against you, be confident that that was a manipulation, but also realize, don't sort of panic out of the trade. Not that you should be thinking like that anyway, but don't panic out of the trade, because there's a good chance it's probably not going to go above the manipulation. Sometimes it can fractionally go above, and that's why what I'd advise is you watch price there. You don't have your stop just right there, you know, 2 pips above the high of the original manipulation. Watch it in here, because very often it'll just go higher and then down, and then it can bounce off the level again, you know, inducing more people in long, and then boom, down below the level. And when it's below the second time, you know, it can do it 3 times. I've seen it before. Then you know, but then you know you know it's probably, usually it's no more than 2, to be honest. Then you know you're in a good trade. And even if you did get tagged, maybe you did, and you got stopped out, because you're not taking a zillion trades a week. It's no big drama to re-enter in that scenario and take the trade again. You're not over trading. You know, you've just been sort of unlucky in the way that you've positioned yourself in the trade, and but ultimately you're not over trading, and you're now in a position where, if that stop hunt is genuine, which you should be thinking it is, and that's based off, again, looking left and being confident in what happened in the entry cheese scenario, etc., then this sure as hell is, you know, I did say that, you know, I've seen 3 swipes before, sometimes more, but most often than not, that second time is when that price will drop, and be confident in that scenario. And if you did get bumped out, retaking another trade, it's not a big deal, right? It's just not. It's still a quality trade. It's still completely valid. But again, if you're able to watch the trade, because sometimes you're not able to, if you are, just watch it. Just 10 pips above that high, something like that. Nothing major, but just look for weakness. Imagine if you got like a doji at that high, you would then, you know, be confident that that's actually, you know, it's over at that stage, and it's going to come back down. And again, how it comes back down differs. It might bounce, it may not, it may just go straight through. If it bounces, just be aware that more people have been induced long again, right? That's just adding again to that whole scenario. But if you get back down there that second time, then you're probably in good shape. And as I said, if you do witness 3-4 events, which in the course of your lifetime as a trader you probably will, the same applies, right? Ultimately, in the end of all of that, you've probably got yourself a hell of a trade, anyway. So I hope that helps explain a little bit more about that. But again, like I say, the manipulation itself, we don't know what it looks like, but we have to act after the first one, because in here, at that point, we have edge, right? At this moment, we have edge. We can't wait and see if it comes back up. We've got to just get involved here. This is where the edge has presented itself. It's just one of those things. If it goes up and takes another swipe, but the reason why it's doing that is because all those orders haven't been filled. So yeah. Hope that makes sense. Sorry for my drawing. Never my strong point. So yeah, so we'll just see how this continues, but it's starting to look pretty decent. Someone mentioned the euro pound to me yesterday, and we'd had this level chalked up. Same thing, right? It's coming up to the level. You get a big engulfing candle. There's your entry cheese, right? As nicer entry cheese as you could wish for. Beautiful. Look at that. Tell me how many people would reject that as an entry off a really nice defined level of resistance. Tell me who wouldn't pull the trigger on that, right? There's not many traders who are that type of trader who wouldn't short off that entry cheese. Who wouldn't short off that entry cheese? It's perfect entry cheese for a level trader to take a trade. So again, as we go forward, this is not working. This is not working out for them. Retracement traders come in, so there's entry cheese for the retracement trader, and now it's starting to look a little bit sketchy for them. So we've got stops above that, and we'll just have to see. They're accumulating, so we'll just have to see how it plays out. So keep an eye out on that. It's nearing the end of the year now, though, guys. To be fair, we're just doing more training than anything else. Again, same thing, right? So you know, we're approaching a well-defined level on the euro yen. You'd expect to see some type of sell-off, right? I can never tell you what it'll look like. I have no clue other than to say a really good way of thinking about it is, if you can put yourself in the shoes of the level trader, is the price action that you're witnessing when it comes up to it and turns, would that be convincing enough for you to pull the trigger? And if the answer is yes, however it looks, whether it's some type of doji, right, or engulfing candle, whatever it is, if it's convincing enough, if you were to look at that, the hard right edge, under the circumstance of you taking a trade like that type of trader would, is it convincing enough? If it's convincing enough for you, it's probably convincing enough for most people. And the other part to it is, it really just wants to be in that sort of that upper third, upper quarter of the, if you're talking about a range, because anything more than that, the traders are going to make money, and you know, it's over. It's never going to be a stop, a setup. So if you do get, you know, 2-3 candles or something like that travel that distance, what's cool about that is that even if you couldn't be certain that everyone would take a trade in an engulfing candle, a singular engulfing candle, what you can be confident of is the further that goes, but without it going too far, like I say, in that sort of top or bottom quarter of the move, that prior move I'm talking about, then that's going to encapsulate literally everybody who would take a trade off a level. So you don't really need to know whether or not, you know, it would have been enticing to draw those traders in or not. The bottom line is, if it goes far enough but not too far, they'll be in, right? They'll be in, because you know, at some point you're going to miss the trade. So it reduces the impact of having to know what their strategy is for an entry trigger. It's probably got them all anyway. Anyone who's gonna go short off there, right? Anyone who's gonna sell, that would get them in. It could be a retracement again, and then more entry cheese, and then we never know. But the entry cheese process is, in principle, always the same, always presenting itself differently, and the manipulation itself is again always the same in principle, but presents itself differently. And that's awesome, because it means that the patterns are less obvious for people to track, less obvious for people to, you know, turn into algos, because it's just impossible to quantify. So it's never going to happen. Impossible for people to get that pattern recognition even in their own minds. It's harder for them to spot and to see. That's a good thing, right? So that's how you'd anticipate a trade unfolding. Whether or not it does or not, who the hell knows? It obviously can you know, go above here and follow through. That's absolutely perfectly possible as well, and we can know the difference between the two as well. That's something we go into in the inner circle, so that, you know, if you want to trade the other side of it, you can as well, or if you just want to stick to traps and manipulations, then you can do that too. So yeah, so hope that helps, guys, and if you do want to join the inner circle, there's a link below. Click on it and I'll see you on the inside. Take care.